Hey everybody, YTG here, and today we will discuss another ICT trading strategy. And today it is actually a modified form of ICT trading strategy. I have used this and it works. And I came across this PDF while I was scrolling on my Twitter and I found it useful, so I thought to share it with you guys. I will share the link in the description. You guys can go and see the original tweet. Okay, so this structure, you can see this entry model is for short trades, and actually you can do a swing trade following this strategy, and usually the profit is pretty big. Okay, like swing trades have higher targets, and we will discuss it step by step. This guy has done a pretty good job. He has mentioned all the steps and we will discuss that step by step. Okay, so in this strategy, the step number one is that you get a swing high on the 4 hour. You can see here this step one, and then in step number two you get a sweep of the previous swing high on the 4 hour, and it takes time. Like you can see, these are all 4 hour candles, so it takes 2 or 3 days. Like it tests your patience. So the step number one was a swing high is formed, and in step number two you got the sweep of that swing high. Now we will discuss the step number 3 and 4, and here you can see these are all on candles of 15 minutes. You can see a 15-minute chart here, and the step number 3 is that you get a sweep of the swing low that formed before the sweep of that swing high. Okay, you can see this was the swing low before it swept the 4-hour swing high. So you draw a line here, and then in step number 4, then price sweeps that swing low on the 15-minute chart. You can see this candle swept these lows. Okay, and it leaves a fair value gap. You will see in the next steps, and there will be a fair value gap. So so far you saw that first we got the sweep of the 4-hour, the previous swing high, and then on 15 minutes we got the sweep of this swing low. Okay, now we will discuss step number 5. You can see the candle that trades through 15 minute also create a fair value gap. It's not necessary, like you can use any other fair value gap, but if this leaves a fair value gap, then this will be a high probability trade. You can see here a fair value gap has been formed before sweeping these lows. So this is step number 5, and I know I'm sure you would be aware of the fair value gaps by now. It is the basics, so I won't discuss it here. Now the step number 6, price trades back into that fair value gap. Like you got the sweep of these lows, and then the price traded back into that fair value gap. Okay, and what you do is you draw 0.5 fib level from this high to this low, and the price trades back at least to 0.5 fib level. Okay, now you should mark that level, 0.5 fib level, and once the price sweeps that 0.5 level, then you can enter your short trade. And then you got the step number 8, which is the entry. Okay, now the step number 9, place stop loss. You should place stop loss just above this swing high. Okay, usually it makes equal highs, so your stop loss should be above that swing high. You can see here. Okay, and then the step number 10 is you should take your profits. I usually take profits at different spots, and here you can see you can take your profit at 0.5 fib level, or you can wait for that 4-hour swing low. But what you should do is you should take some profits, 50 or 60% profit at 0.5 fib level, and then you should wait for that swing low. So this is all about the strategy. I hope it's clear. I will share the link. You can go and check it out. Thank you guys.